Welcome to FM Radio, your go-to podcast for everything in the world of funds management. Whether you're an experienced advisor, a seasoned investor, or just starting your journey, we're here to break down the complex world of funds management, all in a way that makes sense. Each episode, we'll talk to the experts to get their insights on everything from asset allocation to risk management and give you the inside track on how decisions are made. So, in this week's episode, we're going to be talking about wealth advice, how it's evolved to meet the needs of clients and the investment solutions like managed accounts that advice firms have adopted along the way. And here today to help us explore that topic are Elston's Head of Advisor Services, Mark Smith, and Managing Director of Hunter Wealth, Paul Heanly. Hi, Mark. Hi, Paul. Welcome to the show.
G'day, Peter. Thanks for having us.
Peter. Yeah, thanks for having us along.
And thanks for coming into the studio today, Mark, and Paul for jumping into a room there in Sydney. They haven't locked you in a cupboard, obviously. You've commandeered the boardroom, I think.
Well, it's actually, I'm one of the few people left in the group who's still got an office. So, I'm sitting in my office here today. But,
You're not a victim of hot desking.
No, I'm not sure how long it'll last, but while it can,
hang on to it.
I'm making the most of it, yeah.
Now, of course, you guys know each other pretty well. You'd go back quite a few years. When did you guys cross paths?
I think 2019, wasn't it, Paul? Back in
maybe even a bit before. Yep. But 2019, when we were thinking about sort of our the SMA strategy for Hunter Wealth. So I was introduced to Mark at that point, and we've sort of been working together ever since in partnership. Yeah.
Yeah, 2019, you'd like to think it was a different world, but I think in 2019, Trump was about to be impeached. So it sounds like it's the same world as today.
Yeah, not much has changed in many ways.
Probably less social distancing.
Yes. And of course, Mark, you and Paul, you know each other really well, and you're very familiar with Hunter Wealth. But for our listeners, I wouldn't mind having a bit of a chat about Hunter Wealth and I guess what makes it different to other advice firms. Paul, what do you think it is that you really do well at Hunter Wealth?
Yeah, so we have, we've been at it a while. In fact, I went through 25 years with Hunter Wealth last May. And I guess through that time, seen sort of many iterations of the business and what wealth management looks like and what advice looks like and the environment with which we need to operate. And part of, I guess, our success has been able to adapt to the different, sort of legislative requirements and the compliance obligations and volatile markets and changes in superannuation legislation and taking all of those changes and bringing a robust, disciplined sort of strategy and investment solution to our clients and not getting distracted at any one time with the noise that goes with wealth management and financial planning. And, a very good example of that today with Trump and the tariffs and the wars going on around the world. And yes, they are significant issues and significant events, but you get a lot of noise in markets and it's about keeping your clients, sort of comfortable and being available when they need to talk to someone and just, stay the course. Don't get distracted from what it is that we're actually trying to achieve. And I think we've just been really good at that. We fundamentally only do one thing. So we only do wealth management. And we've made that our focus. And, I'd argue that we've done that pretty well over a long period of time.
Absolutely. It's fair to say Hunter Wealth and your business is, a master of wealth management in terms of your focus. It's been very clear.
The other thing I quite liked, I was looking at your website and the thing that really jumped out at me is you've got a very simple idea and I guess a way of connecting with your clients. You talk about what's your idea of financial freedom, which I thought was a lovely way to express that's exactly what the relationship is between the advisor and the client. Can you tell me a little bit about that? Because it feels like something that you really do believe in.
I do, and it's the intangible nature of that. Okay, so... And it means something different to everybody, and it is actually asking that question. And if you came into the foyer of our office here, it's very obvious, right? And on purpose, we allow our clients to sit there when they first come into Hunter Wealth, and we pose that question to them. It's on the wall as you walk into the office, and given that opportunity to actually think about, what does financial freedom mean to them, and it is that important piece. And if they can enunciate that to you and you can say to them, okay, well, if we could help you achieve that, would that be a good thing? And they go, well, that'd be amazing. So you start at a point where you're not talking about investment markets. You're not talking about rates of return. You're really talking about goals and objectives and dealing with the things that are really important to them. So, I'm a massive fan of that brand. I'm a massive fan of that question, and I think it really does resonate with most of our clients.
It's interesting too, because I look at the flip side of that. I couldn't help but think for you and for your advisors, but let's start with you. What do you think about that for yourself as well? What does financial freedom mean to you?
Well, in many ways, it has to start there, right? So if we're not on board as the owners and principals of the practice, then, it's really, really hard to push that down the line. And I have thought about this question often. And for me, surprisingly, even though, if you look at my business card, right, which has a picture of golf on the back of it, and we all, back in the day ran these financial freedom business cards. So you had your idea on the back and golf's on the back of mine. And yes, I love my golf. But, my idea of financial freedom was to be able to go on holidays with my kids, right, and buy chocolate ice cream, right, and not have to worry about whether I could afford it or not. And that for me is the financial freedom piece. So it's that, not to have to worry about some of the discretionary spending that you do in your life.
That's a great description. I was wondering what Mark might see as financial freedom. Do you have an idea of what you think it is for you?
Yeah, and I like the point you make. It is very individual. For me, it's about choice, or being able to, have choices when it comes to how you spend your time and what you spend your money on. I think that's, the ultimate goal is to have that choice and not be sort of stuck with a sort of binary decision. That's it for me. I was going to say I've got a great advisor I work with. He gets to play golf quite regularly, and that's his decision of being able to have some financial freedom. He can choose when he works, so I'd love to work towards something like that as well.
Yep.
I love that in the sense of actually delving into, as you said, defining what it's about. It's a different way to think about goals, and it's an interesting way to get people talking about something that can be quite emotional or impenetrable, hard to define. But when you bring it back to chocolate ice cream and a game of golf, you kind of go, now I'm getting somewhere. I'm actually defining what I like in life and what I'd like to keep doing, and or do something new, explore something new.
Yep.
That's really the emotional thing. And I can see, as you said, that becomes a discussion that's beyond, current volatility, weird headlines that we're all doom scrolling that are sort of distracting us from what's important. But obviously underlying that, there are still some key decisions that you've got to make, I guess, as a business. And you really do have to think about some of those investment solutions that you provide. Over the years, you've talked about doing this for over 2 decades. What are some of the approaches that you've tried in the past and you've thought about in terms of packaging or delivering the right investment solutions for your clients?
Yeah, so we're always very focused, and still today, on managing the things that we can actually deliver with a certainty. Okay, and when you operate in the Australian investment market, so things like tax, the cost of managing your portfolio, strategy, fees, right? They're things that we can actually control and manage with certainty. Now, markets we can't, but we know if we get that sort of bedrock and the basics right, and our clients engage with us for the long haul, then they will definitely get a better outcome. Okay, there's lots of studies around that say, the unadvised client gets the market minus 4%, right, over the long haul. Okay, so that's not a great outcome. Okay, so because they make poor decisions along the way and they're missing out on the really important pieces. So we've always been really focused on that long-term partnership and getting our clients engaged in the financial planning process and delivering the things we can do with certainty. And that really led us to this path of ultimately sort of self-managed superannuation funds, which was really the kernel of where we started as a business. And out of that then came, we wanted our clients to have a clear line of sight to their investments. And so then that started us down a path of building out direct equity portfolios in self-managed superannuation funds, and then adding the other asset classes using a select range of managed funds. And that was then the sort of core portfolio for the business. And we called that best of breed. And, we had a lot of research that went around that. We had in-house capability around research and investment markets. And that's how we started to build out our client portfolios. And it gave us that real connection. So they knew they owned BHP and they knew they had NAB. And when you get that clarity, then you get really engaged with what's going on. And so that was good for us. Yeah. So that was where that was the starting point for what was then CBD Financial Planning, later to become Hunter Wealth.
And Paul, in terms of that sort of model, what were some of the challenges, particularly with, say, the running direct, because it is a lot of work in terms of running direct equities. But in those early days, I'm assuming dealing with stockbrokers and whatnot, were there some challenges getting that to work efficiently?
Yeah, there were a number of challenges. So we also, we employed really a couple of core stockbrokers in the firm. And it also meant that, so they had different views, so the portfolios were different. And also, depending on the timing of when you came in, if you came in on Monday and we set your portfolio in place, and then later that week we made a change, well, you didn't get the change until your review,
right?
Which could be 12 months later. And so
bit of portfolio
you end up
drift.
with a situation. Yeah.
Yep.
So because we operated under a retail advice scenario, everything had to be under SOAs and ROAs, and it was very cumbersome to sweep back around outside the normal review cycle and make investment changes, unless we absolutely had to. But, on balance, those portfolios would be sort of latent, if you like, until the review 12 months later. So that became sort of untenable. So as we grew, you ended up with clients who had essentially the same risk profile, the same strategy, and the same appetite for volatility, and yet we're getting a different outcome, right?
Yeah.
One way or the other. And you just can't have that. So, we needed to build a more robust investment process and philosophy to be able to manage that.
More equitable.
More equitable, more efficient and more equitable clients,
And Paul, in terms of working with Elston, when we first engaged back 2018, 2019, part of that was actually you sort of reaching out around looking for solutions to help manage that. In terms of going down the managed account path, what work did you do as a practice to sort of look at that? Was that sort of a natural evolution that you sort of came to sort of go through that process of looking for solutions?
Yes, it probably came, there's probably a couple of catalysts. So it came with scale. So as we got bigger and we just couldn't be across, the detail of all portfolios, and we just couldn't manage essentially hundreds, right, of bespoke portfolios for our clients. So even though we had a core portfolio best of breed, but it was, they were managed on an individual basis at review. And so that became really inefficient.
Yeah.
We wanted we started with the direct equity solution. So we had, we'd sold that to our clients. They liked that process and that aspect of the portfolio. So we needed a direct equity solution. And we really did that, the process of interviewing a range of SMA providers to, help us solve some of those issues that we had in the practice. And the fact that we were self-managed super fund orientated, we wanted direct equities, but we wanted a better outcome, more equitable. We wanted it managed professionally with more resources. And that's ultimately what led us to Elston. The initial iteration was only the direct equity SMA. So we started with that. And then we quickly expanded that out to be the multi-asset class SMA that we now run today.
And how did clients receive these changes, like in terms of that whole change management process? Was there any sort of learnings?
I think that probably the greater learning was more around the advisors.
Right.
And taking them with us along the way, which we sort of didn't do. It was very much myself,
top down.
Tom, my business partner, doing most of the research and the heavy lifting and driving that solution and getting it on platform and then essentially coming into the advisor meeting and going, great news, right? We've got this thing called an SMA and it's ready to go. And them not being fully sold on that as the solution for our clients. And that's probably been the hardest bit for us is getting all of the advisors on board and getting that penetration through the client base.
Is there any way, if you jumped in your TARDIS and went back in time, how would you do that differently then? If you say the top-down approach was probably something that maybe brought out its own obstacles, how would you bring everybody along on that journey now?
It would just have to be more collaborative. So we'd have to get to the business decision first. So get all of us on board around, we are going to an SMA solution, right? And these are the reasons why, long before talking to any of the providers. So coming up with a solution, which is actually the way we approach our client work.
Yeah.
It's very much, strategy first, ownership second, and then, okay, now what are we going to spend the money on? We should have done that strategic piece better, probably with an external consultant to help us facilitate that. Again, anything that's top down is really hard to push through the advisor network. So, get agreement that an SMA solution is the right answer, and then include them in the selection process around, how do we end up, why Elston at the end of the day, as opposed to, both SMA and Elston being anointed as the solution and the provider, and trying to push that down into the advisor network.
Yeah, it's like we talk about letting them unwrap the present. You don't want to tell the kid at Christmas, so it's a bike halfway through them unwrapping it.
Yeah, yeah, that's right. Yeah.
It's a pretty good analogy.
And it's red.
So it sounds like you had more challenges with the team and as a business in terms of that transition. But you're saying that the clients were, fairly accepting. I mean, I guess you've obviously built up an enormous trusted relationship there, where they go, well, you're the experts. That sounds like a good idea. It was pretty good.
Yeah, really good. And certainly, I still run a pretty extensive client base myself. So that for me was very easily done. Like, I had absolutely no resistance because the portfolio, one of the other things we did with Elston is that we were able to transition, obviously, the direct equities that we already held, plus a number of the other fund managers we were using became core to the SMA. So we could actually take them through. So there were less changes. Yes, there were changes around asset allocation or allocation to the underlying assets, but we could take a lot of the core managers through and a lot of the direct equities through into the portfolio. So that was pretty straightforward. So I didn't have any resistance at all. In fact, probably across the business, I'd say we were at somewhere between 70 and 75% of the assets under advice now sit in the SMA. And the other pieces will get, they'll get swept up over the next couple of years. But again, some of our clients are very investment orientated, and so they're not going to go to an SMA. They want to be able to have a voice around which stocks are in their portfolio. So you're always going to miss out. And when I started, I said, if we could just solve for half of our business, that's a fantastic outcome. Now we've done better than that. So I would love to have every dollar in the SMA, but that's not possible.
And in terms of, say, a new advisor coming into the industry, if you were starting afresh, what sort of advice would you give for them looking at managed accounts? Is that something just from an efficiency and a real world perspective of your own business?
Yeah, because providing, if you're platform orientated, which we are as well, with an SMA solution and just the management of cash and some of the things which are really, they're actually a true client value add, right, that you can build, which technology now allows us to be much better at.
Yep.
And you just reduce the risk of errors, administrative errors, fat finger syndrome. So all of having been able to take a lot of that stuff out of the process and reduce the errors and improve the efficiency just gives you more time to do the things you really want to do, which could be golf, right? So you get a bit of time back in your life, or do more.
Yep.
Do better work for your clients and do the high value tasks and not the administrative tasks. And just having the portfolios rebalanced. That's just
the execution piece. I think
absolute bonus.
Absolutely. If you think about, you touched on it at the very beginning, just in terms of clients, getting different investment outcomes, but to be able to, rebalance, potentially thousands of clients getting the same outcomes, same portfolio, just equitable outcomes for all investors, regardless of balance or account size. I think it's a real powerful piece.
Well, the change we've made just today, because we were overweight fixed interest, underweight Aussie equities in the portfolio, and we've made that change. So we've shifted that overnight, and that goes across all clients. So to be able to move at that speed is just fantastic. So that for us to do that in the old world, that's a year's work, right? Literally, it's like it's every review. We have to write an ROA or an SOA.
It's huge.
Yeah. Can I just jump in on one other thing we probably didn't talk about was when I think about managed accounts, we often talk about transparency being the double-edged sword. Yep. Have you found that? Has that been an issue for you? Or given that your clients have been on a journey, it wasn't so much of an issue for you?
less of an issue. And I think that could be a bit about our client base. So they've been clients for a long period of time. Some clients, it is an issue. Transparency is genuinely a problem, but it's been the same clients with the same problem for a long period of time. So it's not a new sort of phenomena to us. But I think the transparency is a double-edged sword. There's no doubt about that, because the clients can't help but focus on the stocks that have gone down and pay no regard to the ones that go up, because of course everything should go up. Right? So yeah,
your loss aversion.
But I like it, and I think we always found if our clients had greater connection to their portfolio, then they were more engaged and they were better clients, both good and bad.
That's fantastic. Paul, I think you've given us some really good insights on how you've worked with managed accounts. You talk about, I guess, the balance between scale and sanity, it sounded like, which is a good place to be. So thank you very much for your time today. We really appreciate you giving us, your time and giving your perspective, I guess not just on managed accounts, but also some of the challenges and the opportunities that the modern advice firm could be navigating today. So thank you very much for your time. We'll look forward to talking again soon.
No problem.
Thanks, Paul.
Thanks, Peter. Thanks, Mark. Thanks for having me along.
See you, mate.
That's all for this episode of FM Radio. We hope you can join us again soon as we tune into another aspect of funds management that affects you and your clients. In closing, I'd just like to say that Elston acknowledges the traditional owners of country throughout Australia and acknowledges their continuing connection to land, waters and community. We pay our respects to the people, the cultures and the elders, past, present and emerging. FM Radio was recorded at the Pod at Cutting Edge Studios, West End, Brisbane. It was hosted by Peter Goodall, and today's guests were Elston's Head of Advisor Services, Mark Smith, and Hunter Wealth Managing Director, Paul Heanly. For more FM Radio episodes and full transcripts of the interviews, visit elston.com.au. And if you'd like to subscribe to our podcast series to make sure you don't miss a thing, you'll find FM Radio on your favourite platforms, including Spotify, Apple and Google Podcasts. The information provided in this podcast is general in nature. You must consider your own circumstances prior to making any investment. For more information, go to elston.com.au or speak to your financial advisor. Elston Asset Management is authorised by EP Financial Services, AFSL number 325252.